Smart savings plan is an investment technique of dollar-cost averaging DCA. Investors buy a certain amount or number of shares of a stock at regular intervals, treating it as a savings account that accumulates over time. This approach avoids the time-consuming and laborious task of timing the market and missing out on opportunities. It also avoids the herd mentality that leads to buying high and selling low. It is a long-term investment strategy touted as lazy investing. Most investors in recent years have had a relatively limited range of stock, regular investment, locked-in blue-chip stocks. However, today we will mainly introduce how to earn a fortune by investing in U.S. giant stocks. There are many advantages to regular investment in U.S. stocks, the most important of which are the following. Historically, the U.S. stock market has seen many bull markets and only a few bear markets, with the majority of broad market V-shaped reversals. Taking the period between 2000 and the first half of 2022 as an example, the SPY has experienced multiple reversals. Figure 1. The more frequently stocks are accumulated through this method, the more shares can be acquired. Even though the U.S. stock market has also experienced several bear market hiccups, the most notable ones being in 2000, 2002, and 2007, 2008. During the burst of the internet bubble caused U.S. stocks to be rated much higher than now, with the highest evaluations in history. However, high ratings often lead to over-optimism, and the Nasdaq 100 evaporated more than 80% of its market value. Within a few years, however, U.S. stocks rebounded to new highs. By 2007-2008, the financial crisis made U.S. stocks fall again by 50% due to the market being excessively easy money. But after the crisis, U.S. stocks began another decade-long bull market. Therefore, the end of a bear market is an excellent time to enter investment, as quality assets can be bought at a lower price. The U.S. has the largest capital market in the world with excellent liquidity. The U.S. stock market is home to some of the largest companies by market capitalization globally, and the money invested in U.S. stocks comes from all over the world, making it the most active market for trading. As a mature investment market, U.S. stocks offer many value investment targets with excellent operations and unlimited potential. For example, Alphabet, Google's parent company, Amazon, Apple, and volatile giant stocks such as Tesla and Nvidia, as well as consumer evergreens like Coca-Cola, Home Depot, and Costco, all of which are listed on the U.S. stock market. These companies have a global presence, diversified revenues, and a strong financial position with growth prospects, making them excellent choices for long-term stock ownership. Although U.S. stocks are traded in shares, the prices may seem intimidating at first glance. For instance, the cost of one share of Costco is $550, which is equivalent to 16,500 Taiwanese dollars. On the other hand, investing in the Taiwan stock market allows you to purchase whole shares as well as fractional shares, making it appear more flexible. However, it's worth noting that you can also purchase fractional shares in the U.S. stock market. USmart, for example, offers fractional trading for U.S. stocks, making it convenient for investors. For instance, if you invest $500 per month in Apple stock, you can purchase 3.0558 shares based on the previous day's closing price of $163.62. Although the Taiwan stock market may offer access to many good stocks, USmart enables you to invest in good stocks worldwide. Investing in U.S. stocks can be a great way to build wealth over the long term, and picking the right platform is key. USMART, for example, offers competitive commissions and no extra charge for Smart Saving Plan, which can save investors a significant amount of fees. Plus, there's no stamp duty on U.S. stock transactions, and non-U.S. residents don't need to pay capital gains tax, leading to substantial cost savings. If you're looking to invest for the long term, consider saving in U.S. stocks. And to make the most of your investment, remember to follow our top 3 selection logic. First, companies with large market capitalization usually serve as powerhouses of economic growth, with more stable stock price fluctuation. Second, strong moat, intangible assets, conversion cost, network effect, cost advantage, scale advantage. Third, dividend payout earnings, cash flow, need for steady growth. In addition to selecting quality stocks, there are 2 major risk indicators to look for. Maximum retracement rate. Is the maximum loss in a selected period acceptable? Annualized standard deviation, a measure of the volatility of a stock's return. The greater the volatility, the greater the standard deviation. The smaller the standard deviation, the less volatile it is and the lower the potential risk.